Everyone's talking about the mansion tax and the 26 billion of rises, but the truth, if you're self-employed, run a small limited company, rely on dividends or rent, maybe even one property, this budget just hit you harder than everyone else. Let me show you why. Now, most of the news has covered the headline stuff, the tax on the £2 million properties, the threshold freezes until 2031, high tax on savings and investments, EV mileage, minimum wage, and rail fares frozen. But honestly, none of these are the real financial story. The biggest shock, the one that affects millions of normal working people, is hidden in the detail. Let's start with the biggest hit in this entire budget. Dividend taxes going up. A large proportion is the normal people who took the risk to go out on their own, the electrician with a one-man limited company, the painter and decorator who is incorporated, the freelance IT consultant, someone doing a side hustle like Amazon Facebook Marketplace, the startup founder paying themselves peanuts, the gig economy, maybe a driver using a limited company. And if you're self-employed and run a limited company, the standard model is low salary plus dividends. It's completely legal and it's a sensible way to pay yourself, and it has been for years because you take all the risk. Now this budget directly attacks that. And what does that mean? It means lower take-home pay, less margin to reinvest, less money for tools, equipment and advertising, and less room to hire or take on apprentices. And ironically, it disincentivizes starting a business in the first place. And it gets worse for property owners. Most landlords now use SPVs because mortgage interest relief was removed in personal names. But remember, profit is taxed in the company. Then extraction is taxed again as dividends. But now dividends tax is getting higher. So the whole model is being squeezed. Now, the people who are getting hit hardest, the couple who each owned a flat before they met and kept them as rentals, the family with one or two buy-to-lets who have invested in assets to help them with their retirement plan, the accidental landlord who moved to work, the person relying on a small rental income. And I want to be crystal clear, this isn't a might be less efficient situation. It's a definite reduction in take-home pay for millions, because who actually uses dividends? The person relying on small rental income to cover rising costs. These are not the bigger corporations. These are ordinary families trying to build a bit of security. And here is the irony. As small landlords exit, institutional investors will buy more property. There'll be less competition, which means higher rents, lower supply, higher rents. So this policy does the exact opposite of what politicians are claiming. Rental income tax is rising too, combined with higher mortgage rates and the loss of interest relief years ago. This means cash flow shrinks, margins will collapse, more landlords will exit, supply will tighten, and rents will rise even further. This isn't punishing the wealthy landlords. It's punishing the couple with two properties as their retirement plan and the renters who are going to pay higher rents because of it. And while all this is happening, income tax thresholds are also frozen. So more of your income is dragged into higher tax bands automatically. You're going to be squeezed from both sides. The UK is now taxing capital, not just labour. And this is the part no one is talking about. This budget marks a structural shift in the UK. Capital income is now the tax target, and this is huge. Dividend income tax more, rental income tax more, savings income tax more, and investments tax more. Labour income is also going to get taxed more with the freezes. So what's the message? If your plan is to stop trading time for money and live off assets, the government wants a bigger slice. This isn't anti-rich, it's anti-working middle class entrepreneurship. The exact people who are trying to build something. So here's what I do immediately. Review how you pay yourself. Low salary plus dividends may no longer be optimal. If you're a landlord, reevaluate your buy-to-let portfolio, stress test the cash flow, test the rental increases, unfortunately for those renters, and check your limited company viability. I think we need to put more money into our tax wrappers to max our pension contributions, our ISAs, and reduce the taxable extraction. Because with dividends and investment taxes rising, it's now more important than ever to push as much of your investing as possible into these tax wrappers. Things like ISAs and pensions. Inside those accounts, your dividends and your gains are completely tax-free, and the company pension contributions can bypass income tax, national insurance, and dividend tax entirely. So the more you can shelter, the less the new budget can touch you. Now, I want to be clear, this isn't a political video. This is purely based on financial reality. This budget doesn't punish the wealthy. It is punishing self-employed people, small business owners, freelancers, consultants, side hustlers, small landlords, retirees living off dividends. The middle class, especially the working middle class, are being squeezed the most. Now, this is a tax on the people trying to build assets, not on the people who have them already. If you are self-employed, a landlord, or someone who relies on dividends or investment income, this budget affects your future more than any headline number. If you want breakdowns like this, plus practical strategies to protect your money and grow your wealth in a changing UK economy, please hit a like, please subscribe, and drop a comment with your situation, and I'll help where I can. Thank you.